Two people walk into a bank. Same city, same age, same income, same job. Both ask for the exact same loan. One gets approved before the coffee on the desk gets cold. The other gets denied before a human being ever looks at the application. The difference isn't intelligence. It isn't work ethic. It isn't even income. It's a number, 3 digits. A number so powerful that it can influence where you live, what you drive, how much you pay for insurance, and how much interest you'll hand over the next 30 years. Most people think that number is a score, but to the financial system, it's something else. A category, a ranking, a prediction, a quiet decision about how much risk you represent. Because long before a bank decides what to lend you, it decides what kind of borrower you are. And once that decision is made, almost everything becomes predictable. Today, we're reverse engineering the 7 credit tiers that quietly decide your financial life. We'll show you exactly where each tier begins, what that tier is actually costing you, and the single move that helps you reach the next level. Because whether your score is exceptional, average, damaged, or somewhere in between, the financial system already has an opinion about you. The question is, what is that opinion costing you? At the lowest tier, a borrower can pay more than $10,000 extra for the exact same car. Not because they bought more, because the system doesn't trust them. A few levels higher, something frustrating happens. You're making payments, following the rules, doing everything right, and almost nothing seems to change. Then comes the turning point, the moment lenders stop looking for reasons to deny you and start looking for reasons to approve you. A little higher, you'll qualify for almost everything, but you'll still pay more than the people above you. And over the life of a mortgage, that difference can quietly exceed $50,000. Then comes the tier where the penalties begin disappearing. Credit limits rise, offers arrive, applications become routine, and finally, there's the highest tier, the level where money becomes cheaper, negotiations become shorter, and trust becomes automatic. But nobody starts there, so let's begin where the system begins, at the bottom. Tier 1, the exclusion tier. Score range, below 580. Imagine applying for a credit card and being denied. Not surprising. Now imagine applying for a second one. Denied again. A third. Denied. At some point, the application isn't the problem. Your reputation is. Welcome to Tier 1, the exclusion tier. The part of the financial system where the primary objective isn't to serve you. It's to protect itself from you. This tier usually includes people with collections, charge-offs, repossessions, bankruptcies, repeated late payments, or, sometimes, no meaningful credit history at all. And that's what makes this tier dangerous. Because to the system, bad credit and unknown credit often look surprisingly similar. Risk. A landlord reviews your application. Instead of a standard deposit, they ask for first month's rent, last month's rent, and an additional security deposit. Before you've moved a single box into the apartment, you've already spent thousands. You apply for a car loan. The approval comes back with an interest rate so high it almost feels like punishment. But the lender doesn't see punishment, it sees protection. Because lenders price risk. And at this tier, risk is expensive. Consider a $20,000 car loan. At this level, interest rates can reach 15, 20, even 25%. Over 5 years, that loan can cost more than $13,000 in interest alone. Now compare that to someone in Tier 6. Same car, same dealership, same day, their financing might cost around $2,600 in interest. The difference? More than $10,000. Nothing changed except the borrower. Even insurance becomes more expensive. In many places, credit history influences insurance pricing. And at this level, the penalties appear everywhere, sometimes obvious, sometimes hidden, but always present. And the most expensive part isn't the money, it's the uncertainty. Because the system rarely tells you exactly what's wrong. It simply closes doors, one after another, until eventually, you stop applying. You stop asking, you stop expecting approval. But then something happens, a payment arrives on time. Then another, the machine notices. Not much, but enough. Because here's what most people misunderstand about credit. The system's memory is long, but it is not permanent. Every month without a new mistake weakens the old ones. Every on-time payment becomes new evidence, a new signal, a new line in the story. And eventually the story begins to change. One move to reach Tier 2. Open a secured credit card. Use it for one small purchase each month, then pay the balance in full. Not most of it, all of it. Nothing will move the needle faster than proving, month after month, that you can borrow responsibly. Because before the system can trust you, it needs evidence, and evidence takes time. Which brings us to the most frustrating tier in the entire system. Tier 2. The probation tier. Score range, 580 to 619. This is where frustration lives. Because for the first time you're doing the right things, and for the first time, the system is paying attention, but it still doesn't trust you. Think of Tier 2 as financial probation. You're no longer considered a complete risk, but you're not considered reliable either. You're being watched. Every payment matters. Every balance matters. Every month matters. For the first time, approvals begin appearing. Not the approvals you want, but approvals nonetheless. A secured card becomes an unsecured card. A small loan gets approved. A lender says yes, and that first yes matters more than most people realize. Because every approval changes the next approval. Every account strengthens the file. Every month adds history. Every on-time payment becomes another piece of evidence. The machine is slowly rewriting its opinion of you. And opinions are expensive in finance. But this is also where many people give up because progress feels invisible. 6 months of perfect payments. 8 points. $1,000 of debt paid off. A small score increase. The effort feels larger than the reward. Because it is. The system isn't designed to reward effort. It's designed to reward consistency. Anyone can make one good decision. The question is whether you can make 50, then 100, then 200. That's what lenders are waiting to see. And while you're proving yourself, something important is happening behind the scenes. The negative marks are getting older. The positive marks are getting longer. The ratio is slowly changing. Not from bad to good, from uncertain to predictable. And predictability is where trust begins. A car loan that once came with 20% interest may now arrive closer to 15. Still expensive, but noticeably better. Progress is real, it just doesn't feel real yet. The door is no longer locked, it's slightly open, and on the other side of that door is the tier where financial progress finally becomes visible. 1 move to reach Tier 3. Lower your credit utilization below 10%. If your credit limit is $1,000, keep your balance below 100. The lower your balances appear, the safer you appear. Because from the system's perspective, a person who constantly uses most of their available credit looks stressed. A person who uses very little looks controlled. And control is one of the strongest signals of trust. The question is, what story are they telling? Up next, the qualification tier. The level where lenders stop treating every application like a mistake and start treating some of them like an opportunity. Tier 3. The qualification tier. Score range, 620 to 659. Something changes here. Not dramatically, not overnight, but enough to feel it. For the first time, the system stops treating every application like a potential mistake and starts treating some of them like possibilities. This is the qualification tier, the place where financial progress finally becomes visible. A credit card application that would have been rejected a year ago now comes back approved. The limit isn't impressive, but that's not what matters. What matters is that someone said yes. The first yes is always the hardest one, because every approval changes the next approval. Every account strengthens the file. Every month adds history. Every on-time payment becomes another piece of evidence. The machine is slowly rewriting its opinion of you. And opinions are expensive in finance. A few points higher, a slightly longer history, a slightly lower balance. Suddenly things begin moving. The car loan costs less. The deposit gets smaller. The approval process becomes easier. Not because you're wealthier, because you're becoming predictable. And predictable people are profitable. A $20,000 car loan that may have cost more than $13,000 in interest at Tier 1 might now cost closer to $6,000. Still expensive, but the gap is closing. The system is no longer asking, should we approve this person? Now it's asking, how much risk are we willing to take? And that's progress, real progress, the kind that starts showing up in everyday life. A landlord responds faster. A lender asks fewer questions. An approval email arrives that would have been impossible a year ago. Small victories, but meaningful ones. Because every approval creates momentum, and momentum changes behavior. People begin checking their scores more often, paying closer attention, taking credit seriously. For the first time, they can see a future version of themselves that isn't constantly fighting the system. And that's where danger appears. Because this is also the tier where many people make a mistake. They think they've won. The approvals arrive, the limits increase, the doors begin opening, and they assume they've arrived, but they've only qualified. Qualification and trust are not the same thing. The system is willing to work with you now. It still isn't willing to bet on you. Not yet, because the next level isn't about access. It's about stability, and stability changes everything. One move to reach Tier 4, add an installment account. Something simple, a credit builder loan, a small personal loan, an account that demonstrates you can manage different types of credit responsibly. Because the system doesn't just want proof that you can use credit, it wants proof that you can manage it. And every new type of account helps complete the picture. The file is improving. The question now is whether you can make it boring. Because lenders love boring. And that's exactly where we're headed next. Tier 4. The stability tier, score range 660 to 699. Banks love a certain kind of customer. Not the richest, not the flashiest, not even the highest spender, the most predictable, because predictable customers make predictable payments, and predictable payments create predictable profits. This is where your credit file starts becoming boring, which is exactly what lenders want. No missed payments, no sudden spikes in debt, no strange patterns, no surprises. Month after month, the story stays the same. And that consistency is powerful. Because for the first time, the system begins expecting success instead of failure. Think about that. At the lower tiers, lenders are constantly asking, what happens if this person doesn't pay? At Tier 4, the question quietly changes. Now they're asking, how much business can we do with this person? It's a subtle shift, but it's the shift that changes your financial future. Credit limits begin increasing. Sometimes without you even asking, approvals become routine. Apartment applications become normal. Credit stops feeling like a barrier and starts feeling like infrastructure, like electricity. You only notice it when it's missing. This is where many people experience something they've never experienced before: convenience. The ability to apply for something and reasonably expect approval. The ability to finance something without worrying about whether the answer will be yes. The ability to make financial plans without assuming the system will stand in the way. That's a powerful feeling, because uncertainty is exhausting. And for years, uncertainty may have defined every financial decision, but now something else begins replacing it. Confidence. Not confidence in the score, confidence in the process, confidence that the right behavior produces the right result. And that's where wealth quietly begins. Not with income, not with luck, with consistency. A score in this range won't always get the best rates, but it gets access, and access changes options. Consider a mortgage. A small difference in interest rate might seem insignificant. 0.5%, 0.75%. Tiny numbers. Numbers most people barely notice. But on a $300,000 mortgage over 30 years, those tiny numbers can become $50,000 or more. That's the hidden reality of credit. The penalties don't arrive all at once. They arrive slowly, quietly, 1 percentage point at a time. And by the time most people notice them, the money is already gone. That's why Tier 4 matters, because this is the foundation. Everything above this level depends on what happens here. Stability creates trust. Trust creates options, and options create leverage. Which brings us to the level where almost every door opens. Almost. One move to reach Tier 5. Build a flawless payment streak. Not a good one, a flawless one. Because at this stage, your score is no longer looking for dramatic improvements. It's looking for proof. Proof that today's behavior is permanent. Proof that next month will look exactly like this month. And the longer that streak becomes, the more valuable it becomes, because the financial system rewards one thing above all else: predictability. And once you've mastered predictability, you become something every lender wants: a preferred customer. And that's where we're going next. Tier 5, the preferred tier, score range 700-739. This is where people start believing they've beaten the game. And honestly, they're not entirely wrong. Most of the financial world is available now: credit cards, auto loans, mortgages, personal loans, premium products. You're approved more often than you're denied. The days of begging for access are over. Applications stop feeling like gambles. Approvals stop feeling like miracles. The financial system finally treats you like a normal customer. But there's a catch, a very expensive catch. You're approved, you're just not preferred. And most people never understand the difference. Because the denial hurts, the premium doesn't, at least not immediately. Nobody calls to tell you, congratulations, you qualified, but someone else got a better rate. Nobody sends a letter explaining, you're paying an extra $80 a month because another borrower looks slightly safer. The difference hides itself. Inside percentages, inside fine print, inside decades, 0.25% here, 0.5% there. Tiny differences that quietly become thousands of dollars. And because the money disappears slowly, most people never notice it. Consider a $300,000 mortgage. A borrower at this tier might receive a rate just slightly higher than someone in Tier 6. The monthly difference might not seem important, maybe the cost of a dinner out, a streaming subscription, a tank of gas. But over 30 years, that same difference can quietly become tens of thousands of dollars. Money spent not because you borrowed more, because someone else looks safer. That's what this tier really represents. The line between good and exceptional. The line between being accepted and being wanted. This is where the financial system starts separating reliable borrowers from elite borrowers. And the gap isn't obvious until you do the math. That's what makes it dangerous. Because comfort is the enemy of progress. People reach this level and stop paying attention. They assume the game is over. But the game isn't over. The system trusts you now. Just not enough. It's simply become harder to see, to offer its absolute best. That privilege belongs to the next tier. The level where lenders stop tolerating you and start competing for you. One move to reach Tier 6. Keep your oldest accounts open, even if you rarely use them, even if they're boring, even if they no longer excite you, because time is now one of your greatest assets. The longer your history becomes, the stronger your reputation becomes. And reputation is what lenders buy, not income, not promises. History, the longer the story, the more believable it becomes. And eventually, the system stops wondering who you are. It already knows. Tier 6, the prime tier. Score range 740-799. This is where the relationship changes completely. For years you've been proving yourself to the system, making payments, building history, avoiding mistakes, demonstrating consistency, and eventually the system believes you. Welcome to the prime tier, the level where trust becomes an asset, something valuable, something banks actively want. Applications become easier, approvals become faster, limits become larger, and the offers begin arriving before you even ask. Think about how strange that is. At the lower tiers, you chase lenders. At this tier, lenders chase you. Pre-approved offers arrive in the mail. Premium products become available. Rates improve, terms improve, options improve. Nothing about your personality changed. Nothing magical happened overnight. You simply accumulated enough evidence, enough history, enough consistency, enough trust. And trust is one of the most valuable currencies in finance. Remember that $20,000 car loan. At Tier 1, it may have cost over $13,000 in interest. At Tier 6, closer to $2,600. The same vehicle, the same purchase, more than $10,000 saved. Not because you negotiated better, not because you earned more, because the machine reached a different conclusion about you. And that conclusion affects everything. Lower interest, better terms, less friction, faster approvals. The benefits compound year after year, quietly, almost invisibly, until one day, two people with similar incomes have completely different financial outcomes, because one paid less for money. The irony is that most people think wealth creates great credit. Often it's the other way around. Great credit makes wealth easier. Money borrowed cheaply stays productive. Money borrowed expensively disappears into interest. And over decades, the difference becomes enormous. This tier isn't about status, it's about efficiency. The machine has finally stopped working against you. Now it's working with you. A level most people misunderstand because they assume it's about luxury. It isn't, it's about trust, pure trust. One move to reach Tier 7. Use your score like a tool, not a trophy. Refinance expensive debt, negotiate rates, upgrade terms, leverage the reputation you've spent years building. Because a high score only creates opportunity. You still have to use it. And the people who understand that are the ones who eventually reach the final tier. Tier 7. The elite trust tier. Score range 800 plus. Most people imagine this level incorrectly. They picture black cards, airport lounges, private bankers, luxury perks, and yes, those things exist, but they aren't the point. They're symptoms. The real product is trust, years of trust, decades of trust, thousands of tiny decisions stacked on top of one another. Every payment, every account, every statement, every month, the machine remembers all of it. And eventually, it reaches a conclusion. This person is unlikely to surprise us. That simple conclusion changes everything. Because uncertainty is expensive and certainty is valuable. At this level, money becomes cheaper, negotiations become shorter, approvals become routine. Not because you're special, because you're predictable. Lenders know what you're likely to do, and confidence has value. The financial system rewards certainty the same way investors reward stability. With better terms, better opportunities, better access. Consider a $300,000 mortgage. A 1% improvement in rate can save more than $60,000 over the life of the loan. Not because you worked harder, not because you got a raise, because a number convinced the system that you were safe. That is the hidden power of elite credit. Not prestige, leverage, the ability to spend less for the exact same opportunities. The ability to access products that remain invisible to most people. The ability to negotiate from a position of strength. But here's the most important thing about this tier. Nobody wakes up here. There is no shortcut, no hack, no secret strategy, no magical trick hidden somewhere on the internet. Only time, consistency, patience, the very things most people spend years trying to avoid. Because the truth is almost disappointing. Elite credit isn't created by brilliance, it's created by repetition. Doing the right thing long enough that the system stops questioning you. When that happens, you stop fighting the machine. You become one of the people it was built to serve. One move to stay here, protect it. Because the higher you climb, the more valuable every mistake becomes. One missed payment can undo years of progress. One moment of carelessness can damage a reputation that took decades to build. Set safeguards, automate payments, monitor accounts, pay attention, because at this level, the goal is no longer growth, it's preservation, and preserving trust is always easier than rebuilding it. But after everything we've discussed, one question remains. What exactly is a credit score measuring in the first place? And the answer is far simpler than most people think. Let's go back to the beginning. Two people walk into a bank. Same city, same age, same income, same job. Both ask for the exact same loan. One gets approved, one gets denied. At first, that feels unfair. How can two people who look so similar receive completely different outcomes? The answer is simple. The bank isn't making a decision about who they are, it's making a decision about what it expects them to do next. That's what credit has always been. Not a measure of wealth, not a measure of intelligence, not a measure of success, a prediction built from patterns, history, probability, risk. The financial system doesn't know your dreams. It doesn't know your struggles. It doesn't know how hard you've worked. It doesn't know why you missed a payment, or why you needed the loan, or why life became difficult. The system doesn't see any of that. It sees data, and from that data, it creates a reputation. A reputation represented by 3 digits. Most people spend years believing a credit score measures wealth. It doesn't. Some wealthy people have terrible credit. Some ordinary people have exceptional credit. What a credit score really measures is something much simpler. Trust. Trust between you and a machine. And whether we like it or not, that machine influences almost every major financial decision in modern life. Where you live, what you drive, what you pay, what opportunities appear, and which ones never do. The difference between Tier 1 and Tier 7 usually isn't intelligence, it isn't luck, it isn't talent. It's the accumulation of small decisions, repeated month after month, year after year, until those decisions become a pattern. And that pattern becomes a reputation, and that reputation becomes a number. That's why the 7 tiers matter. Not because the numbers are important, but because the consequences are. A higher tier doesn't just change a score, it changes the cost of borrowing, the speed of approvals, the quality of opportunities, the amount of friction standing between you and the life you're trying to build. And the most important lesson is this: no tier is permanent. The person in Tier 1 is not trapped. The person in Tier 7 is not guaranteed to stay there. Every tier is simply a snapshot, a moment in an ongoing story. Because the system's memory is long, but it isn't permanent. Every payment writes a new line. Every month adds another page. Every year changes the story. Some changes happen quickly, most happen slowly, but they happen, whether you notice them or not. Right now, somewhere inside a database you've never seen, the machine is already watching, already calculating, already updating its opinion. The question isn't whether the story is changing, the question is whether it's changing in your favor, because one day you'll apply for something important, a mortgage, a business loan, a car, an apartment, a line of credit. And when that moment arrives, the decision won't be based on who you intend to become, it will be based on the story you've already written. So the real question isn't, what is my credit score? The real question is, what story is my behavior telling? And if you don't like the answer, you can start changing it today. One payment, 1 month, one decision at a time. So now I'm curious. Not your score, your tier. Which one are you in right now? Tier 1? Tier 4? Tier 7? Let me know in the comments, because in the next episode, we're building something far more practical. A complete 90-day roadmap for every tier. Not motivation, not financial theory,